Hello, Mark Whitaker from WebCityForex. What I'm going to do is I'm going to give you an explanation of how a MetaTrader program works and why using robots probably won't work for you in the long run. So let's just go ahead and look up here on my search automator force. I've typed in Forex robots. I'm going to look down here. I'm going to click on the one here that says best Forex robots. So we're just going to click on it and wait for the program to show up. Alright, here we go. And on Google it shows us some of the paid ads up front here, and then it shows us which ones are in the first position using the keyword best Forex robots. So okay, so we have best Forex robot here in number one position. So I'm going to go down here probably to the second or the third one and see what's going on here. Alright, so we see the best Forex robots. It has a list of them right here. I don't see very many of them that I've ever used. Here's one that I used. Let's just look at that one. This is a great one. Does lose. Does have a 95.82% accuracy. They are very good at what they do. They also have an affiliate hook here to where you can actually promote it. So let's go ahead and stop talking about robots. That was just an example of one that I know that works. Doesn't work all the time, but 92% of the time it does. So if you manage your funds correctly and your risk management, then you can pretty much get into a growth situation. Let's go ahead and open up a MetaTrader program I have here installed on my computer. Alright, there's an update here, so I'm just going to go ahead and look for it, and probably isn't one. Alright, so what I've done is I've built a demo account and I've placed $5 million in it. And this is just a demo account, it's not real money, so it gives you a chance to actually play with the program. Let's put it on, okay, lets you play with the program and set up charts. I'm just going to go ahead and choose the Euro USD. Going to maximize this. Going to look to see what kind of templates I have here. Let's look at this one. Let's look at another one. It's a little bit complicated for the first explanation. Okay, here we go. This is a pretty interesting robot here, which doesn't give you a live trade. You actually have to live manually trade it. So it tells you what the average true range is, 21. So if I had a 21 average true range from right here, I would look at where it entered in at, and I'd look at 21 pips, which is a little bit higher there, and 21 pips below, and that would be where I would set my stop loss at, and I'd probably go down to 30. But notice there's an arrow up, and a blue here, and the blue line is higher than the red line. That means that I'm going to get into a trade on this robot when I enter into this next candle right here. So let's take a look to see what I actually made with this manual robot trading mechanism. Well, if I got out at the end or the start of the next one, these lines here were still blue, 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 blue until we get to this line right here. But notice there's not much of a profit right here when we get to this line. So it starts red, so I could have gotten 42 pips out of this because the lines would have been changing and told me to get out of it, and these lines right here were getting closer to each other. So I probably would have gotten out when this line touched the blue line and crossed it. So it looks like about 31 pips. So that's just an example of a robot, manual robot, and how you can actually look to trade. So let's talk about money management. $5 million is a lot of money, and so if you had a 2 to 3% risk, let's look at 1%. 1% would be a $10,000 bill. So you'd have to take $10,000. Well, okay, 1% and 5 would be 10,000 times 5, which would be $50,000. So what we're talking about here is $50,000 divided by 30 pips. So if we lowered that to $30,000 at 30 pips, it would be $1,000 per pip. And so what you would do is you would set your stop loss down here, and you would take a lot size. You would take a lot size of 1,000 pips, $1,000. So that would be 100 pips, 100 lot size. And if you took the buy, which is in this case the blue is above the red, so you would take a buy position at the entry of this candle. The market's closed right now, so I can't actually take a practice on it, and plus this has already happened, so I wouldn't want to do it anyway. But let's go ahead and take a look at what we would have actually made. I think I talked about that a little bit earlier. So $1,000 moved to right here, and if we got out on half our position, we would have, I believe that says 64 pips, so right around 64, 65 pips. So let's say we're conservative, 60 pips. So we take out half our position and we draw our stop loss from here to the entry of this level, so we have now a zero trade on the second half of our trade. So we stop out $1,000 on 60 pips, and we take that profit in half, so that would be $30,000 profit right then and there. And so we would watch the trade as it went up, and as we got out of this one, we would have a little bit lower stop loss, so we would be set at about 37, and we would have moved our stop loss from here to here, so we'd have a zero trade going on our second half of our trade, and we would have been as low as 36 pips profit. And on the next candle, as it went to here, it opened up a little bit higher on the next candle, came back down, and went back up. So once I left this candle, I would have actually set my stop loss to right here at 38 pips. So I would have ended up having a minimum of 38 pips on my second half of my trade, which would have been $38,000. So we can look up here as we go, and we're still in the blue candles, and we're blue here, so it's telling us to get out. But we would have crossed our loss somewhere right here or in this area right here. So we would have ended up with $68,000 for that trade by trading and taking the profit on half the trade, setting our stop loss to zero, so we'd have no loss risk whatsoever in this trade. Our minimum income would have been $30,000, but we got out because we were able to change the stop loss to right here at the bottom of this candle right here on the bottom wick, and we would have gotten out right there, so we would have ended up around $68,000 for the trade. And that's basically what we're looking at. Thank you for watching WebCityForex with Mark Whitaker.